Hey everyone, happy Thursday, June 13th. It's about 9:40 in the morning on the West Coast, and it's time for another market update. Going back to last week, it's a really busy week. I know I feel like I say that every video, but it really was. Going back to last Friday, we had a big jobs report. This week, we had inflation data. Yesterday was the Fed a rate hike announcement and press conference. So this might be a little bit longer video, so let's get right into it. First thing, like I said, last Friday, we got the May BLS jobs report. This is the big jobs report that the Fed and everybody pays the most attention to. It has not been friendly to us over the last year plus, and again, it didn't come in our favor. Kind of, grounded to a halt our rally that we had going off the ADP reports. 185,000 job creations were expected. It came in at 272. Unemployment did tick up to 4%, but then wage inflation, ticked up as well. So that kind of offset any positives we would have got out of this. So two to the three things the market's got to look at came out negative. So that kind of, didn't help us at all. So let's take a closer look. Like I said, 185,000 jobs created were expected. This is the business establishment survey once again. There's two different parts. Business establishment survey is a lot of math. They're looking at some numbers and then exploiting it out over a bigger number. You can question their math maybe. Came in at 272,000 jobs created. There was another negative revision, 10,000 jobs knocked off the April number, 5,000 off the March number. This has been very common. They come out with this big number, and then as time goes on, they negatively revise it. So again, kind of frustrating. Where all these jobs came from, though, 231,000 of the 272,000 came from their birth-death model. And this is where the BLS tries to figure out how many jobs were created from small businesses opening and how many jobs were lost from small businesses closing. And that came in at plus 231,000. The ADP, which goes off actual payrolls, came in at negative 10,000. So big discrepancy there. Almost all these job creations were basically this birth-death model. So again, you can question the math, but again, the markets look at this, the Fed looks at this, and it wasn't a good thing for us. Next thing they look at is the household survey. So this is where they actually call people and speak to people on the phone. I don't know who answers the phone, but when people call about this kind of stuff, but they talk to people, try to figure out, one-on-one what's going on. And this came out. This is where the unemployment number came out, and that jumped from 3.9% to 4%. That's because total labor force dropped by 250, but there was a negative 408,000 jobs lost. The U6 number, which is a little bit more all-encompassing number, stayed at 7.4%. That's the highest since November 2021. So this number came in our favor, but like I said, the wage inflation didn't. So we'll want to keep an eye on this unemployment number, though. When it gets to 4.2%, maybe that's our golden ticket. So taking a little closer look at something out of this report we've talked about before is part-time versus full-time work. And just for May, there was 625,000 full-time jobs lost. Part-time, there's 286,000 jobs created. Multiple job holders added 16,000. So this doesn't really paint a rosy picture of the job market. This looks like people are losing full-time work, can only get part-time work, have to get second jobs. So again, something we have to keep an eye on. Hopefully the Fed's paying closer attention to all this underlying stuff and not just that, headline number, which it seems like they might be. So the next thing we got, this week was the May CPI. So PCE is the Fed's favorite inflation report, but the CPI is important too. Markets pay attention, they pay attention, and that came in better than expected, which was good to see. The headline number was all-encompassing, was up basically flat month over month. It was expected to go up a little, 0.1%. The core came in at 0.2%, plus 0.2%. It was expected to be at plus 0.3%. So overall, a good report for us. And if you take a closer look at this data, the core was up really, if you look at that, you take it out in tenths a little bit more, is 0.16%. And shelter was up 0.18%. So shelter basically is the whole number. The rest of the 54.6% that goes into core, all the numbers, they basically were came in negative. So this shelter number still is our headwind. It's still lagging behind real-time data. Motor vehicle insurance actually came down a little bit for the first time in a while, still up 20% month over month. This has been our other, enemy. The shelter and the motor vehicle insurance has been on all these core numbers in PC and CPI. Gas, like we knew, because gas oil prices come down, was in our favor for this headline number. So that's good. It looks like they're going to, up production a little bit in the fall, so that's good for energy prices, gas prices. So that's all good. This inflation number came in good for us. This was a good one. So that was good to see after this BLS jobs report. Fed week. So yesterday, the Fed had their most recent rate hike or rate cut, you would hope, announcement. And as everybody expected, there was no change. But the most important part is they release a statement when that happens, and they also do a press conference afterwards. Let's start with the negative. The headline, the negative, is basically they showed less cuts. More members think there'll be less cuts as this year goes on. So that is not a positive. The markets did not like that. But getting a little bit deeper into stuff, we'll take a look at what, Chairman Powell in the statement said. So basically, some positive. He said a policy is restrictive enough, meaning they don't think they need a hike anymore, which is good. He did say that, he acknowledged that the unemployment rate's up 0.6% from its low, but still said 4% is historically low. He pointed out the quit rate is lower, which is true, which meaning people are quitting their jobs less to find new jobs, which means people feel less confident getting a better job, which is not good for people, but good for, if we want to see unemployment, and stuff go up. Job openings are lower, but still above those unemployed. This is a little, this comes from the JOLTS report, and it is lower, but we know this is double counting. If you work in different states, or, these online postings for different states for work at home jobs are being counted once, twice, 3, 4 times in these numbers. So that number is even lower, so you'd like to see them, maybe digging that number a little bit more. Wage increases are slower. So that, that's wage increases have been, that's something they pay attention for inflation. So that's a positive that wage increases are slowing down. He did point out that, discrepancy between the business and the household survey in the BLS job report. So that's good that they're looking and seeing like, hey, that's a little off. And he said you could argue the business survey may be overstated, which again, that's the one where they're just coming up with math and coming up with these birth death numbers and stuff. So that was good for him to see, but he didn't mention the birth death. And so we'd like to see him go a little bit deeper and say, like, what is this birth death model? And then on inflation, he said, basically in their statement, last time it said lack of progress. This time, one of the only really changes in that statement was modest further progress. So that's a positive, change they made. They acknowledge that there's lag in shelter, which we just looked at, which good. But then they said they were data dependent. So they're basically saying, oh yeah, the shelter is lagging, but we're still going to rely on that data. So that's like, again, driving while looking in the rear view mirror. You're driving out, looking out the windshield and seeing what's coming up ahead. You're looking at what, this data said for 2, 3, 4 months ago. And then the year, this is something the markets did not like, the year-end core PCE estimate, they raised it from 2.6 to 2.8, and that's due to replacements. This is something, I showed you guys, there's not a lot of positive numbers coming up to replace, since every month we're replacing the previous year's month's number. So this is something one of the CNBC guys asked about, he didn't understand, and Chairman Powell schooled him on and basically said, we're replacing lower numbers. So, based on the model, it would have to come in even lower than last year's number for it to come down. And last year's numbers in some of these months were pretty good. So overall, not the worst press conference. We had a lot better gains in the morning off that CPI report. We lost some of it off the announcement, and mainly this going up, and that, and then less cuts this year. So moving on, next thing we got today, and this was good, again, on the inflation front, was May's producer inflation. So this is when they look at the numbers and come up with what inflation is going to be for us, or the producers that are making the goods for us. So that was expected to go up month over month, 0.1%, came in at negative 0.2%. Core came in at a plus flat at 0%. It was supposed to go up 0.3%. Taking a closer look at that. 60% of the headline was due to gas prices, which is great, for everybody, for us, for producers, everybody. So those numbers, like I said, dropped overall. This is all good to see on the inflation front. Some of this PPI stuff gets put into the PCE, the big inflation report later this month. So hopefully that's, something in our favor and we get a good number there. And another positive but not positive thing today was initial jobless claims came in at 242,000 new job claims. 225,000 were expected. This has been ticking up, so something to keep an eye on. Like we talked about, the Fed's keeping a close eye on unemployment and stuff like that. So, if they think that unemployment is trending up and they don't feel comfortable, they have a dual mandate to not let that happen, and that's when our golden ticket to see rate cuts. Average 30-year conventional dropped. Last week it was at 7.04, jumped back up, after that BLS jobs report, but the CPI, the PPI got us back down. 6.97, good to see underneath that 7 number. Again, this is you're just keeping track. This isn't necessarily what you get, but it's good to see, give you a general sense of where rates are headed for it, whether you're doing FHA, VA, conventional, jumbo, whatever. Important dates coming up. We got the PCE jobs report on June 28th. And we'll actually get another PCE before the Fed. The Fed's next, rate hike announcement like they did yesterday is July 31st. So we got over about a month and a half until that happens. We got the PCE, another BLS, another PCE, a CPI. So all that data, we kind of want to come in our favor. We want to see jobs kind of get weaker. We want to see inflation either hold steady or come down even more. If all that happens and we get some good data, maybe, in July we do get a rate cut. But right now the markets are still thinking September, and maybe that's the only one, depending on, which Fed member you believe. So fingers crossed, things continue to go a little bit in our favor. It's nice to see things drop below 7. If anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.